Hey there, this is Scott Welsh, and oh, am I excited to talk to you today. This week's topic on the weekly blog post is something I've been working on off and on, mostly on, but off and on, golly gee, since 2010. So we're talking 7 years I've been working on this, and specifically lately, I've been working hours and hours. I barely got off my little research stool chair yesterday. So excited to talk about this. I think I'm finally ready. So, what is it that I'm so excited to talk to you about? It's the 100% winning system. A system that wins 100% of the time. And yes, it's a real thing. This is not a marketing scam. Now, we'll give you a little bit of background first, though, if the slide will ever change. And look, it did. Here's the story behind this and why I'm so interested in it and why we're talking about it today. In 2010, my girlfriend and we made basically our trading stake. It's the stake that allowed us to get to this point where we can trade for a living. And in 2010, this is where we made a huge chunk of that right off the bat. But we were doing it in a discretionary manner, which is interesting because we talk about robots in this weekly blog post. Now, I have already told this story, but I'll give you the brief rundown anyway. And I have an ebook that I wrote for my first course that I put on Kajabi, and that ebook is in that course, by the way. But anyway, back in 2010, we were using a system based on Rob Booker's Bosslator course, Bosslator principles, meaning trading back to fair value. And we were trying to trade back to fair value, the 800 simple moving average at that time. And we were to say, well, okay, if price gets very far away, we're going to try to trade back to fair value and make a small chunk of money each time. And we're going to try to, we're not going to be greedy. We'll just take a little bit and we'll try to win all of our trades, right? And if things got in trouble, we'd work our way out. Okay. Well, again, this is a very short version, but here's the good news. In a 3 month period in 2010, we won about 60 trades in a row. I forget the exact number. I can look it up for you, but about 60 trades in a row, and we made about $50,000 in 3 months. Okay. A lot of money. We were making about roughly, again, these are all estimates, and I've got the actual notations from one of our notebooks that we kept, but it was about $1,000 a day between our accounts every day, all day. We'd get up in the morning, we'd look at the charts, I'd go off to work and teach some tennis lessons. Jill would take the trade. She'd text me, we made $1,000, and that was our life just about every day. Okay, pretty good day, pretty good life, pretty good weeks, whatever. The bad news is, though, at the end of that 3 month period ish, we realized we were betting way, way too big, and eventually we had the worst. I had the worst week of my life. I can't speak for Jill, but I had about the worst week of my life. Getting into trouble on a trade, seeing our account draw down. While it ended up making $10,000, the drawdown and going through that was awful. I don't remember ever really fully getting into sleep that whole time. It was on. And again, I've outlined that story in the ebook. All right. We stopped trading it. And in fact, I've never discretionary traded again. But since that moment, I've really never stopped thinking about that time, right? It was a glorious time. And the thoughts that keep haunting me and keep pounding in my brain are, well, why can't we do that again, right? And how much money have we lost by abandoning it? I mean, yes, we were trading too big, and yes, there were some really severe moves since then, and yes, there were severe moves that would have definitely cost us our account at the betting level we were doing at that time. But with maybe a few tweaks, how much money have we lost by not trading it? If we were trading it all along, what would we have now? These are the thoughts that keep going around and around and around in my head. But it's important right now we take a minute for you to understand that 100% winning trades, 100% winning system is not a scam. I mean, it's just not, right? First of all, I have the proof, right? I actually did it, right? But if you think about it, if you think deeper and throw out all the marketing and all the mistrust, just throw that out for a second, you'll realize that 100% winning is not a scam. All right, let's take Warren Buffett first. All right, now it's common sense to think that if someone says, I've got a 100% winning system, that you should run for the door, right? That's just common sense, right? And it probably is. I hate to break. I hate to say it, but some ad you get in your inbox or you see online that is a 100% winning system is probably a scam. That's true. Okay? But is the idea, the concept, the actual thing of 100% winning trading system, is it really a scam? I mean, think about it. Warren Buffett is famous for saying our favorite holding period is forever. Right? He said that. Look it up. Google it. Just look Google our favorite holding period is forever. Warren Buffett likes to buy a stock and hold it forever, right? Not saying he does that every time, because clearly he doesn't, but that's what his favorite holding time is. Now think about that. What does that mean? Well, among other things, a holding period of forever means that his win rate is 100%, right? He's going to hold it until it's profitable, and then he's going to hold it after that. By saying your holding period is forever, he's not saying my holding period is forever because I like having a loser forever. He is saying I'm going to buy it at a discount and hold it till it's profitable, right? Think about that. Do you see the ramifications? He buys something on sale. He buys something that's well off fair value and then just waits. This is the most basic, most fundamentally sound, most, I don't know, commonsensical investor of all time. And his trading methodology is I just wait until it's profitable. I just wait until all my trades are winners. That's a 100% system, right? I mean, there's no getting around it. He's trading, in his mind, a 100% system that never loses. Excuse me. But think about 100% trading number two, example number two. Long-term capital management. Now, I fancy myself somewhat of an expert on long-term capital management because I'm fascinated by it. I've read the book a number of times. Um, it is a fascinating story. I encourage you to read it on long-term capital. But that was a huge hedge fund that was made of the smartest people in the world, Nobel Prize winners or whatever, Pulitzer Prize. No, it wasn't Pulitzer Prize, but you know what I mean. There were people who had the Nobel Prize for economics. It was the smartest, most advanced hedge fund ever. It was the hedge fund to end all hedge funds. And then they almost brought down the entire financial system when they lost about $4 billion in 6 weeks, right, back in 1998. Okay. That it's a famous story and it's amazing. It's an amazing story. But think about this, okay? Let's go deeper. What was their system, right? What was long-term capital management actually trading? Their methodology, not the specifics, the overall methodology. I mean, yes, it was complicated and they used derivatives and all that stuff. But at its core, it was a 100% winning system. They, like Buffett, waited for things to get way out of whack, way oversold or way overbought or whatever you want to call it. But they waited for price to move far away and then bet it to come back to fair value and then waited until their trades won. All right? And it's a very, very effective way to trade. It is. Now, what went wrong? Well, they traded way too much leverage. They believed in their models and they threw out common sense saying this might be a little bit too big of a bet. They didn't care. They just wanted more, more, more. So what went wrong was they traded with too much leverage. But this part is forgotten. Long term, at first, for their first couple of years, they averaged 40% per year on billions of dollars. That's unheard of to make 40% on billions, plural, of dollars, right? And they just won month after month after month. And I understand Madoff was fake and he won month after month after month. But Madoff got in it to be fake. Long term got in it to be smart, right? And they just kept winning and winning and winning. And why? Because they waited for stuff to get extreme and then they just, again, waited it out. So what's misunderstood about long term is that their system was actually fine. But their leverage and their blind belief in models that were based on, I don't know what they're based on, normal bell curves is what it was based on, which is ridiculous in trading. But their system was actually fine. If they had betted small and not gone for 40, 50% a year, they might still be in business. But of course, the way these guys think, they would always go out of business because they always wanted more leverage because they were, well, anyway. So, those two examples aside of 100% winning system, is there a robot system that wins 100% of the time that's not a marketing scam? Well, the answer is yes. Of course there is, right? Now, what are the advantages, and I'll get to that, but what are the advantages, before I get to that, of a 100% winning robot system? What are the advantages? Why are we talking about this? Why are we interested? Well, you never lose, right? That's a pretty big advantage. How would you feel if every time your robot took a trade, or you in a trading system, if every time you took a trade, that trade worked out, right? Now, I think it's time to spend 2 seconds on clarification. Not every trade wins, but every series of trade wins. So Rob Booker always talks about trading as a project. When you trade with this robot or this particular system, you are betting it to go one way. If it doesn't go your way, you bet again, and you bet again, and you bet again, X amount of times, until it finally, the entire series of trades are profitable. So if you trade 3 times, right, you buy your initial one and then trade 2 more times after you get 2 more setups, and you eventually make X amount of dollars on that series of 3. 2 of those might be losers, and one of the trade might be winners. So when I say 100% system, I don't mean every trade's a winner. Of course, that's not true, but every series of trades is a winner, and of course, that is true, and that can be true, right? So got it? So how would you feel, though, if every time you got into a series of trades, you knew it was going to work out? Or at least you had extreme confidence that it was going to work out. How would you feel about your trading then? Would you like trading? Would you stick to your system? Would you be excited to get up and get your next trade going? I have a feeling you might, right? I know it's pretty exciting for me. But what are you prepared to do, right? 100% winning system doesn't come easy, right? Sean Connery told us, right? What are you prepared to do?
You see what I'm saying? What are you prepared to do?
I'm sorry. I just love that quote, by the way. That's a great scene from Untouchables. But anyway, the problem isn't finding it. The problem is who wants to cross Capone. And that's a scene from later in The Untouchables, not too long after that. The Untouchables were set out to, and who cares about the movie, but it's important. It's relevant to our story. So listen up for 2 seconds. Everyone knew where Al Capone was. That wasn't the problem. The problem was who wants to cross Capone. Once you cross that line, Al Capone unleashes his wrath upon you. So most people just didn't. They weren't ready. They weren't prepared to go all the way, so nobody crossed Capone. So that's why Sean Connery in that movie said, A, what are you prepared to do? And then B, the problem isn't finding it. The problem is who wants to cross Capone. Oh, I'm going to show it. What the heck?
Mr. Ness, everybody knows where the booze is. The problem isn't finding it. The problem is who wants to cross Capone.
Right? Sorry, I just love those quotes. Okay. The problem isn't finding a 100% winning system. That's not. It's out there. It's who wants to deal with what comes with it. Who wants to wait it out, right? There's a very, very famous phrase that was very, very relevant to long-term capital management's demise, and that is the market can remain irrational longer than you can remain solvent, meaning that for example, long-term, they got in really, really big, and then the market went irrational and they lost all their money. If they hadn't gone in big, they could have waited it out, but they did, and they couldn't, right? So the market can remain irrational. So you have to have the discipline to be able to handle what the market brings to you. And then, of course, there's Rob Booker's version, which he said in a webinar recently. I can remain solvent longer than the market can remain irrational, right? I love that. It made me chuckle. But that's really the secret. What Rob said is really the secret. Can you remain solvent longer than the market can remain irrational? What does that mean? You have to have the psychological fortitude to wait it out, and you have to have the extreme discipline to not get greedy. Now, what are the chances of someone being disciplined and not greedy? Unfortunately, they're pretty low. But can you be that person? Can I be that person? Maybe, right? It's at least worth finding out. All right, all this talk about 100% winning systems. Let's get to the work that I've been doing over the past weeks, hours and hours and hours and hours. Here's some proof. Now, this is not a chart that I would trade necessarily, but it's a chart that I've tested. And again, another quick side note, the testing on this is super easy as far as a variable and mathematical standpoint. There aren't that much variables to trade. The bad part of this is the testing takes about 5 times longer than all my other testing because of the look back periods and so forth. So it's not complicated, but it's time consuming. And you can basically slap these variables on any currency pair or future or whatever. Yes, there is a small bit of testing, but this is a universal principle. A 100% winning system is not complicated. It's not 800 rules. It's like 2 rules, right? That's the fun part of all this. All right, here's some proof, and I did some work on this, but here's just a blank chart. It's a 15-minute chart. We could use any time period we want, I suppose. I love the 15-minute chart, and that's what I'll be talking about. You know this by now. But let's take a look at the performance report. Now, this performance report goes back to 2003, which is as far back as data goes on Forex and TradeStation, right? Total net, again, this is a hypothetical $10,000 account as always, and we're going in with a very small trade size. Now, there's a little bit of profit, hooray. We get a little bit of rollover credit, hooray. Here's what I wanted to show you. Total number of trades, 628. Percent profitable, 100%. Got it? Do you see? I didn't doctor this up. I didn't. I didn't mess around with it. I didn't really even test it this much. I can show you chart after chart after chart after chart after chart 100% winners. Over and over and over again. Easy. I mean, I could do it. I could go on and on and on. This is not a hard thing. I told you that. In fact, take a look at that. Look at that graph, right? That is left corner to right corner, straight up, right? And guess what? All my charts look like this, right? You can do this for anything. It's not really, it's not really that hard, to be honest with you. It takes a lot of time, but it's not a lot of complicated rules or complicated thinking, right? So, what's the catch? The catch is to get a 100% winning system, you have to be able to withstand drawdown, right? Because we aren't using stop losses. To get a 100% winning system, you can't have a stop loss. There's no stop loss in Warren Buffett. There's no stop loss in long term, which is obviously dangerous. And if you take a look down here on this just sample chart, you can see the max drawdown is $7,300. Are you willing to wait that out? Right? Now, that's the worst it ever did. Most of the time, it never even comes close to that. Right? Most of the time, these trades are over in minutes or hours. But that's the key. If you want 100%, you're going to have to deal with some pain. Now, let's go back to the slides. First thing I want to ask you is this interesting for you? All I've talked about is a trading system that has stop outs and has profit targets and so forth, right? You manage your risk. It's way easier to manage your risk with a stop loss, right? So do you love the idea of 100% winning system, even if you have to suffer a little bit of drawdown? Or would you prefer me just to say, listen, this is a fine blog post, just drop it. I'm not interested. I'd like to go back to more regular trading, right? Love for you to maybe send me an email or tweet me at swelsh66. Either way, just a brief little email saying interested or not interested, right? And if you're interested, then I'll go on, and I'll go on quite a bit. But if you do like it, just letting you know, I've put together a portfolio of robots, right? The drawdown on the portfolio of robots is way, 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 way less than what I just showed you, right? That was just a very quick example that I put on the charts for you just to show you 100%. The portfolio of robots took a little bit of testing, not a lot, but a little bit of testing, and then I put them all together into possibly one account, and then we can look at the drawdown and look at the winning percentages and so forth. I'm planning on doing that portfolio tomorrow, Thursday, 2 p.m. Eastern Standard Time, and the link, of course, to register is beneath this blog post. If I get a bunch of emails saying this is stupid, don't do this, then I'll change the topic for tomorrow. But right now, I'm planning on showing a portfolio tomorrow of a bunch of different robots all put together in going for a 100% winning series of trades. So I've been extraordinarily excited, but it's not up to me, it's up to you. So let me know if you're interested. Um, so if you are interested, assuming, again, I'll be doing that Thursday webinar. If you can't make the Thursday webinar, the best way is just to subscribe to my YouTube channel. Um, you can just Google any of them. Actually, the YouTube channel will be at the bottom of this post. You can just click on that and go subscribe. Um, I'd love to get a bunch of subscribers on there if possible. Why? Because I love doing these videos and it's more fun to do it when people are there. I've got a nice subscriber base and I'm very happy with it, but love to get my email list and my YouTube list to be the same. Wouldn't that be cool? But anyways, that's a long explanation for nothing. You can subscribe to my YouTube channel and you don't have to be at the webinar necessarily because all of my videos from Thursday are going on that YouTube channel. All right. Here's the contact information. That's the email if you want to let me know if you're interested. Always talk to Justin. There's the blog. I'd go there. And there's my course. And there's my free ebook. All right. I've been really excited to talk about this week. I hope you're interested and we can talk about it again tomorrow. Until then,